Hey guys, I hope you guys are having a great spring and looking forward to the summer. This is your April market update. I know you guys been hearing a lot about the real estate market, the mortgage interest rates, and just the economy as a whole. As you guys well know, inflation is still an issue. But at the same time, there is some, you know, positive aspects of at least in my opinion, when it comes to home ownership. And the thing that concerns me is all the doom and gloom conversations you guys probably been hearing or listening to or been talking to friends and family about, such as, foreclosures and short sales and doing loan modifications again to get people back in order with their finances. In general, the real estate market is the strongest it's ever been. But at the same time, that being said, that strength has continued to affect affordability, whether you're a buyer or seller. Because at some point, when you sell, you become a buyer. But in general, the real estate market is strong. The issue right now is interest rates and how interest rates are really affecting third party aspects of, such as credit cards and car payments and short term credit. But it does have a spillover effect when it comes to the real estate market. So, what I want to go through with you guys today is show you a presentation about how the market is acting in Southern California and why the doom and gloom you've been hearing about um, is not necessarily what's actually happening on the market. So, as I mentioned, the market's really, really hot. And what I mean by that is we have sellers that are getting multiple offers on their properties if the property is priced correctly. Regardless of what the interest rates are doing, buyers are still out there. And one thing that will continue to have at least the real estate market in Southern California, we don't have enough properties for the number of buyers that are out there that are still looking to buy. So, for example, if you look at the listings from the the United States, single family total available properties weekly, the inventory really hasn't changed. Even though we're in the middle or the beginning of selling season, inventory for homes really hasn't increased throughout the United States. And a lot of it has to do with affordability, number one, aka buyers being able to afford the new rates, and two, homeowners that previously refinanced, not necessarily wanting to lose that rate, or the other issue that will continue regardless of rates, what rates are at, is having enough properties for the number of buyers out there trying to purchase a home. Um, Here is the Southern California active listing inventory. As you can see, we're still in a down trajectory based on the last conversation I had with you guys from last month's reports. That hasn't changed, and even though we are in April, that inventory hasn't really increased as traditionally we get at this time of the year. Um, the U.S. total housing inventory, we're looking at about every thousand means a million. So that's a million homes on the market compared to what we were at in 2008. I've shown this chart to you guys before, and as you can see, that hasn't changed, and that trend is still seems to be going downward. So in regards to like saying, hey, we're gonna have some foreclosures on the market, and then some opportunities to purchase a home or invest in another property, they're out there. It's just the challenge is gonna be it's not as plentiful as the news is making it out to be. The next thing I wanted to show you guys is the interest rates throughout the country. The average interest rate right now is 6.67. Most of you guys are probably in the threes and twos. I know I have some clients that I put into the ones back in 2021 and 2020. So that's another reason why people wouldn't want to sell technically because of that. But one of the things you can do is if you wanted to sell and you like the equity that you have and you want to make it a selling point, you could have an assumable loan that a borrower can take over, and they'd be more than happy to take that 2, 3, 4% interest rate that you have today to put your home on the market. But in this market, because of the lack of supply, that's not really going to be necessary to get exactly what you want for your home in today's market. Um, Southern California's new listings monthly right now, as of 2015 per se, 2015 2016, we're missing 108 missing sellers. As you can see, for example, if you look at 2021, which is the red line, even 2020, when we were dealing with COVID, we had more listings then than we do today. And the rates were better in 2020 compared to where we're at today. And buyers were still out there buying. And this is why we're not in that scenario where I see foreclosures happening. The market will absorb whatever comes onto the market with the number of buyers we have out there today. This is new listings monthly, percentage-wise difference from 2017 and 2019. Just in that period alone, we were already missing 40,000 sellers that should have hit the market to average out the demand that we have, that we've had, ever since probably 2012 when the market started to correct itself after the collapse we had in '08, and all the foreclosures and the inventory was finally absorbed by the market. And that's when prices actually started to increase during that period of time. Now, demand, let me clarify once again, is how many buyers are out there. How many properties are actually in escrow already pending? That's what how demand is actually measured. As of today, we have 11,900 properties on the market today. Last year we had 16,000, which is 35% more than we have today. And pre-COVID, we had 17,728 properties, which is 49% more than we actually have today. So once again, I'm going to clarify. The market's not going anywhere as a homeowner. Your values are not going anywhere as a homeowner because there's not enough properties, even with the demand that we have today. This is expected market time. Right now, we're expecting about 45 days from list to sell to close, 45 days, if you price the property correct and market the property correct and expose the property correct. The property will sell within a short period of time. And as I mentioned, 45 days today from list to sell. Last year was 27. Why was it lower? Rates were lower. But even 45 days is still a very hard market. And 3 years ago, we were at 62 days. Okay, that was pre-COVID, during COVID, 62 days to get your home unlisted and sold. Once again, that number has decreased. You would think it would increase because rates are higher. That's not happening. It's still a seller's market, and it will, in my opinion, will continue to do so, especially once rates start to come down. It's going to be even more advantageous for a seller or homeowner, excuse me, with the value of their home. And finally, like as I stated before, this is a time year over year, days on market. And right now we're right in the middle of the hottest part. I know below that it's insane. This is, I don't see that happening, but I do believe if we keep this pace up and inventory doesn't increase, I wouldn't be surprised if we dip underneath that 40-day mark where the market really is going to get crazy. So these are the hottest markets in the country. LA is 51 days, Orange County 37, Riverside 47, San Diego 31, San Bernardino 51, excuse me, Bay 39, Sacramento 35, and the Phoenix, we're looking at 44 days. So all the news you guys been hearing about doom and gloom and values dropping and foreclosures happening, that's not going to happen, at least anytime soon. We would have to get on days on market on property well over 90 days, 120 days. At that point, the market should be really, really concerned. But I really don't see that happening, because even if there was that happening, there is a lot of third-party money floating out there in the economy that are more happy to absorb that, hold on to the asset, rent it out, and as values come back, they'll resell it and make profit on that end as well. But anyways, your home buy report is below. This particular presentation you just saw is actually below. If you want to go through it gradually and kind of analyze it for yourself, you can. It is below. And once again, if you guys have any questions, concerns, wants, just curiosities about anything related to real estate or mortgage, please do not hesitate to reach out to me. And of course, I will always appreciate referrals. Until next time, hope you guys are well. Bye-bye.